All right, well, in the face of all this talk about central bank action going forward, we wanted to talk a little bit about the road ahead for Canada's loonie. And joining us to talk about the currency story is Kit Juckes. He's head of FX strategy at Societe Generale. Kit, nice to have you with us. For months, we've seen some weakness in the loonie against the American currency. How would you describe the dynamics at work in the market right now? What's been going on?
Well, it's turning around slowly in the sense, I mean, the Canadian economy, I don't know, it's generated jobs faster than the US economy. It's been growing fairly well. Sentiment about the loonie has turned a little more negative, with the most recent data being a bit softer, with concerns that the wildfires are turning up in the GDP data. And that's kind of got people a little bit nervous, although I think against that, historically, the time I want to buy the loonie is when US rates are peaking, and then the loonie typically will outperform as US rates fall. And that feels awfully like right now. Say, when I look at the underlying story on the Canadian economy, yes, there was a wildfire problem, and it was quite a big problem. But the rest of it, the demographics is strong for the economy. The labor market has been more resilient than people had expected, more months than not. And so I think when we get to a world where the Federal Reserve has more room to cut rates than the Bank of Canada, I think I'm going to get back under 130 for dollar Canada. But it's this moment that we're just in a short-term period where, I mean, firstly, people are a bit worried about the most recent data. And secondly, I guess it's not quite as super attractive as something like the Australian dollar, a more high beta way of trading, the turnaround in the US data from the other side of the Pacific. So it's being left a bit behind, and will eventually catch up.
Now, just to clarify what you're saying, because I think a lot of people think, just given where Canada's economy is, that it would not be a surprise to some market watchers to see interest rates come down at some point next year, just due to the sensitivity that Canada has to things like higher mortgage rates. Even if we start to see an end to the rate hiking cycle in Canada as well, if the Fed itself is nearing that point, that alone could be actually one of those helping hands to the loonie, you're saying?
Yeah, correct. I mean, in a sense, the Fed raised rates more than the Bank of Canada, and if they both turn at roughly the same time, then I would have thought that the loonie can probably outperform the US dollar as that weakens. Now, depending on how bad it is, if we smack straight into a big, deep recession, you'll get a lot of risk aversion and collapsing prices for all sorts of things. But although that's possible, it's not going to be anybody's central case. If what I get is to a situation where the Federal Reserve has raised rates enough, it's clear the economy's cooling, they'll probably be reasonably quick to turn that round, even if they say high for longer lots of times in the next few months, and markets will price that in. And I think that'll help undermine the US dollar. And beyond that, I don't think there's anything especially bad about the outlook for Canada relative to the U.S.
Kit, we also track what's happening in the oil market. A lot of people have historically tried to figure out the connection between our currency and what's happening with crude. Crude's been all over the place, obviously, as we've been navigating a lot of the geopolitical headlines as well. How closely tied is the Canadian dollar, in your estimation, to something like the price of oil?
Less so than it used to be, because the U.S. has become a petrocurrency as well, to be honest. So, there was a time when Canada was exporting a lot of oil and when the United States weren't. That time is in the past, and I think that makes a difference. It's still a bigger share of GDP for Canada, so it's not irrelevant. And if you took the broader commodity context, then I think the loonie's still affected by it, but it hasn't struck me as being such a bigger deal in this economic cycle as it was 10, 20 years ago.
All right.